Let's head to Mexico now and check in with pro trader Alan Knuckman for his trade of the week. Alan is with St. Paul Research. And what do you think about the market action post-Fed, Alan?
Hello, Angie. More market momentum. Ain't no stopping us now. We're on the move. Stocks were up 4% last week, new all-time forever highs.
I know you're still tracking a lot of trades. Tell us about your updates.
All right, let's talk about our current trades. The good news, with a little bit of volatility, some profit taking, we've got 0 plays for December. So we had sold a whole bunch of positions in November, did very well selling into strength. So January, we've got DuPont, American Airlines, and NEO. March, we've got FXI, which is the China ETF. And then April, a whole slew of plays. Halliburton, UNG, Canadian Solar, and Rio. So plenty of time there. And also a June T play. T is for time with AT&T.
Tell us about your brand new trade of the week, Alan.
All right, this week's trade trigger, as you can see, I'm doing some research. Emerging Markets ETF. So the EEM ETF is 10% lower in the last 6 months, even though the market itself, the S&P continues to go higher and higher and higher. It's negative for 2021. It's been trading between 50 and 55 now for 1 year. A breakout of that range targets 60. And this is 15% off the February top. So the risk reward is set up for a bounce. A bottom base is being made here. Now 45 is an important level because the EEM ETF has tracked between 30 and 60 for 10 full years. So 45 is a halfway point, a big super support to lean on. So the play here is a 45 call. We're looking at a June option. Again, a huge amount of time because it's low volatility. The 45 call for June has more than 6 months of time. And again, the upside target here is 60. 60, if we get to 60 on an upside breakout, this option will gain in value in a big, big way.
Alan, you never seem overly concerned about what the Fed has to say. What are your trading day takeaways?
All right, let's talk trading takeaways. Trading takeaway number 1, Fed day. Finally. So the rate reality is very simple. We're going to have 3 hikes in 2022, and we're going to have 3 hikes in 2023. Now that's going to bring us to a whopping 1 3/4%. That's what the market's telling us. And then there are 0 hikes in 24, 0 hikes in 25, and 0 hikes in 26. That's what the markets are telling us right now. So that brings us to number 2, the known knowns. This has been the most telegraphed rate policy in history. We know rates have to go up because they're at 0, and they're going to slowly rise. Of course, 1 3/4% in 2024 is where we're going to be. So the important thing is how the markets react, and the markets are continuing to make new records, and we're up nearly 30%, knowing these known knowns that rates are going to rise. All right, number 3, holiday highs. All right, you have to believe, and we've seen this over and over again, that the markets continue to make new highs over the last decade. Doesn't matter the holiday. It could be 4th of July. It could be Christmas. It could be New Year's. We tend to see these markets continue to rally into the highs. And again, just like the holidays here, you've got to believe.
Thank you, Alan, and adios.
Thank you.
Go to businessfirstam.com for where to see our show on TV.